Trading Nut, episode 159.
Measured moves. Don't leave home without it, right? And it's, I think, especially on a monthly and weekly, measured moves. I mean, they are so powerful. The market does the same thing every single time. Human emotions, they never change, right? And those prints show up on longer-term charts.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Jim Bartoloni on the show. Now, he goes by the name of Bart. We're going to call him that throughout the show. Now, he is an ex-Top Gun pilot turned trader, trades pretty much everything, or has traded pretty much everything from Forex to stocks. He does what I would have to say is probably the most unique kind of approach on a chart that I've ever seen. We shot a video after the show, so you're going to get to see how that works. Make sure you check that out. It's coming very soon to the airwaves here on Trading Nut. He calls what he does advanced pattern recognition, and he's been doing it for over 10 years. All recorded there on the blog Bart's Charts, where he's done that from 2013. Very regular blog where he breaks down the trades that he's taking and some of his charting as well. So guys, yeah, do check out the video we shot after this where he breaks stuff down on a price chart, and other things coming up here on Trading Up. Before we get into the interview, we've got the Genius Trader hitting the airwaves next week, so it's launching next week, guys, so please stay tuned for that. Subscribe to everything you can on the Trading Nut channel and you'll get access to that. We've also got the Robot Builders Club offer for January. If you do want to get access to my Robot Builders Club and automate some or all of your trading, learn how to do that, take that skill on board, then this is a great time to join, because you get my Trailblazer bot and my Happy Singles bot. Their performance reports are over there on the tradingnut.com website. You've got to dive into the detail on them though as well, because I'm running a number of different strategies in them. You'll see that a couple of the pairs aren't performing well, and these are because these are experimental strategies, but overall they're looking pretty solid. So guys, go and check that out, and remember the doors are closing soon on that Robot Builders Club, so please, if you do want to come on board, now is the time to do it, and learn how to automate what you're doing. Alright guys, enough from me, let's get on with the show today with Bart. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With CTI, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed. Alright guys, here we are on Trading Up. We've got Jim Bartoloni on the show, and goes by the name of Bart, right? So his middle name's not Bart. You go by the name of Bart. Look, yeah. It's fantastic that we finally got you on.
Thank you for your patience.
Yeah, look, I got a recommendation, and I've seen your blog, which stretches back to 2013. So everything, I mean, which is great because there's like a historical record of your entire trading journey from then until now. And I even saw there was a post on I think maybe 1 or 2 days ago, that you put one up in December 2021. So you've been doing this consistently for ages, and I was even surprised at some of the stuff I saw back in 2013 with some of the things you're drawing on charts. Hence why the blog's called Bart's Charts. Now,
my wife came up with that name, by the way.
Oh, did you?
Yeah, my wife.
Oh, your
wife.
Oh, your wife. Oh, cool, cool.
Yeah, I was like, wow, that's awesome.
And so, guys, if you want to know a quick sort of... Actually, I'll tell you what, you do the potted history, because I think your sort of life story as a whole is pretty cool. So if you want to start off by giving us that, and then how you fell into trading.
Yeah, for sure, Cam. So first off, thanks again, and thanks again for your patience. It's been crazy over here in the States and travel and everything. So it's really great to meet you, and it'll be a lot of fun to talk to your subscribers. And, man, like I said, I'm an open book. So any questions, please subscribers, people listening in, whatever, to you ask. Just hit me on the blog. I will always get back. Sometimes it may take a little time, but I will always respond. So, I always had an interest in the markets, starting, back when I was a teenager, and I was able to join the Navy. So I flew fighters for the Navy for 11 years, and that was a phenomenal run, and quite frankly, a privilege. I still can't believe they gave me the keys to a $60 million jet when I was in my 20s, but, a blind squirrel found an acorn, if you will. And I was able to Top Gun, and I was a strike lead, and it was just an incredible run. So I got out, and I actually started a virtual reality stock company, believe it or not. We were 15 years too early, so we sold that. But when I was selling, our product, I came across an old fighter pilot of mine, an amazing fighter pilot and trader. His name's Jeff, and call sign Easy Lay. You do the math. And he was up at an F-16 Ohio Air National Guard in the States, and we're talking and everything, and all of a sudden I hear this "Arugara." I'm like, what was that? And he's like, you don't want to know. Frankly, I should have listened to him. I wish I didn't. And I came around the corner, and there was a chart. I'd never seen one. I didn't know what the heck it was, and he was trading currencies, foreign currencies, spot currencies. And I forget exactly what the currency was. But he's like, oh, that's the dollar versus the yen. Like, what? Against the who? And that started the journey. And for whatever reason, I just was really drawn to what I saw on the chart. So Jeff and I started pushing each other. We just started literally like picking up books and just putting them on our forehead and throwing them aside. And so there was something that was, I think, telling me that the market pivots at a number for a reason. Did I know the reason? Absolutely not. Do I still know them? Absolutely not. But I can get close, right? And so I've spent a significant amount of time with some mentors. I was able to train with Connie Brown. She's an incredible lady, brilliant. I mean, the lady's brilliant. Joe DiNapoli was where I first learned a lot of the DiNapoli levels and how to work different nodes and really hone in on how to do retracements. Larry Pesavento has taught me a lot about the patterns. He's a friend and a mentor. I Skype with him all the time. And then, Michael Jenkins really brought a lot to me to kind of fuse how I looked at the market. And so I got my chartered market technician qual. And for a while, for about a year or two, in fact, that's where I met JC Peretz from All Star Charts. I was his instructor for CNC level 3 for the whole CNC process, and I was teaching kind of its Elliott wave stuff, and it was a blast. I really enjoyed it, and in fact, it was right when stuff went to crack in 2007, and I'll never forget it. JC was running Central Park. I was playing Led Zeppelin when the levee break, getting ready for a class, and he's like, "Why are you playing now?" And I go, "Because the shit's about to hit the fan," and we were laughing, and here's what a geek we are, all of us chartists and stuff. He was listening to an audiobook, right, of irrational exuberance from the perspective of real estate prices. And he's running through Central Park, and I'm like, okay, we got screws loose, right? So anyway, I started my own CTA firm. I was a spot currency trader for about 4 or 5 years. And when 2009 hit, it all kind of blew up. And that's when I went, you know what, I'm done with other people's money. I'm going to manage my own money, and I'm going to start this blog. JC got me blogging. And really, it's just kind of my stream of consciousness, right, of what I'm seeing in the market for other people to digest and enjoy. It's free, right? I don't charge for it. And then it's also how I kind of see the market and try to, manage risk and enter positions. I know, we were talking about it, Cam. It took me a long time to be a consistent investor, period, end of sentence. Right before Cam hit the recording button, I said, hey, I'm an open book. I've made all the mistakes. And so, what's drawn me to, my style of trading is it's all, to me, patterns. I do no fundamentals. Quite frankly, I'm not smart enough to do fundamentals. And I just look for patterns based on sacred geometry and music. And if you spend enough time, probably way too much time, on charts, you can start seeing these patterns repeat over and over and over again. And all that means is, they're able to help you manage risk. People ask me, they're like, well, how often are you right? And I'll say, I'm right 100% of the time. Oh, right. I'm like, I'm right 100% of the time because I know exactly where I'm wrong. And if you're a trader or an investor, you'll understand what I'm saying, right? Because I have no idea what's going to work and what's not, right? All I know is, have I done enough to manage risk? And that takes us back to my flying days, right? Ultimately, you got to kick the tires and get shot down the cat, right? Catapult shot. And so each time you ask yourself, have I done enough to manage risk to take off? And if the answer is yes, salute and off you go. And once that catapult shoots you down the cat, it's out of your hands, right? You don't know whether you're going to live or die, or, how you're going to do. So it's the same way with trading, right? What Mark Douglas, every market moment is unique. So I've just gravitated towards the patterns. They help me manage risk. They're right a lot of times. They fail sometimes, right? But if we manage the risk, we can become, a consistent, profitable trader. And it's been a journey for sure. So that's kind of how we got to this point in time. Did that answer your question, or you need a little more detail?
Yeah, that's awesome. I mean, it's a fantastic journey. I think, I've got a few questions around the whole Top Gun thing, personally. But sure. I mean, what was your call sign first of all?
Bart.
Bart. Funny that.
All kind of.
And how long was how close to the movie Top Gun was? Top Gun, sort of the zero, absolutely zero.
Yeah.
Okay.
My wife loves the movie. There's a new one out in the States, and they're like, "You're going to watch it?" I'm like, "Absolutely not. I'm not going to watch that." But it's still some pretty cool footage and stuff. So I'll probably get Harangue to go into it, but they don't want to watch it with me because I'm like, "That's not true. That's not true. That's not." But we'll see. But yeah, it was seeing a curse from a trading perspective, right? And in fact, one of my first times I trained with Connie Brown, Aerodynamic Investments. Have you ever heard of Constance Brown? Or
no, the name does sound familiar. Yeah, it does sound familiar.
Hold on a second, just click it.
I've definitely had Larry Pesavento on the show before.
Oh, have you?
Yeah, he was on my
so much fun.
Original podcast. So yeah, Connie, I've heard of the name. I probably even reached out to her and not got an interview over the course of the years. But yeah, so. I mean, she was teaching you things like, what was this, like sequential, something geometry and patterns? I've never even heard of those. Or all these things you've just mentioned, I've never heard of any of them.
No, well, that's good and bad, right? It's good because not many people are doing it in the market. It's bad because we gotta help you see the light. But do you want to go down the road, right? The Matrix. Which pill are you going to take?
Yeah.
Sometimes I'm wondering why I took the one I took, but it is what it is. It's all part of the journey, right? But anyway, when I was training with Connie, she's like, people assume that aviators make great investors / traders, and that's true to an extent. The issue is when we're planning for a mission and we're, doing a real life, and we try to plan it to, the nth degree. And for the longest time, I brought that to my investing, right? And after I really started to see the path, not that I understand them, that I see them, right? It's all a work in progress. Trust me, we all are, right? I would try to get it down to within cents, right? And that's just ludicrous, right? And so the longest time, a lot of my inconsistency and my losses were that I was trying to be too precise, right? Because I had to be precise in the cockpit, right? If I wasn't, people die, right? And so it took me a long time to remove that psyche from me, that I didn't need to be right. And we had to be right landing on an aircraft carrier or we die. And so, and we don't like to lose, right? Again, if I lose in the air, I die, right? So that mindset was actually a hindrance for me. And it took years for me to kind of get that out of my psyche that, okay, I'm entering at 10. If it goes down to $9.30, that's okay, right? Is that 70 cents of drawdown something I can handle? And so I realized, number one, what time frame do I really like, right? And so then you step back to my flying days. When you get into a dogfight, right, a 1v1, it's actually extremely chaotic. It's dangerous. It's very violent, and it's three-dimensional. I mean, things are happening, and by the way, you're also waiting for that person's wingman to come and shoot you too, right? So 1v1 dogfighting, you know what it is? It's day trading.
Right.
I didn't like dogfighting. So guess how I did day trader?
Yeah.
Right? But then as I looked at my career, what we were very good at as naval aviators especially, we'd go park the boat 200 miles, 150 miles off the coast this summer, and we'd take off, and then we'd have time to build a picture, right? We know we were going to go, but, okay, we've got 100 miles, 150 miles to figure this out. And so what I realized when I really became profitable is it was my time frame. So I'm like a weekly month person now, right? I don't like to go down into a 15-minute chart and day trade. And, some people do, and some people are incredibly great at it. I'm not, and I proved that, by the way. So I'm more of a longer term. I mean, I might put a position on 10 to 15 times a year, and that's a lot, right? So I'll, like the DBA, I'm long DBA. If you look at the blog, I blogged about that for 4 years before I have a position on it.
Right.
But I was able to build the picture, right? And then I was able to kind of like seeing like, wow, we've got some issues over here with commodities and the stocks, right? And I'm like, oh, as it continued to march into, higher but lower single digits, I was like, oh, this is good. And we finally hit the target, the pattern. It was like, gosh, money's over in the corner. Let's go walk over and pick it up, right? So I've gotten much more methodical, much more slower in my time, monthly and weekly, and it's just slowed everything down for me. So for those who are day traders, I'm probably not the blog that you want to watch. You might, like Baba, we can talk about that chart in a little bit. I blogged about that last night. It hit a very important level, and it popped big time today. Well, the day trader make a lot of money on that, right? I'm more interested in holding things for months to years. So I'm much more of a long-term positional investor. Is that making sense?
Yeah, and so like these patterns, and look, guys, I jump back to like your first posts back in 2013, and we actually second.
God, I don't even know what it was.
Your first post was like testing this out or something. Your second post had some charts with these big circles drawn on the chart, like just sort of a circle drawn on the chart and crossing over price, and then some sort of angled lines sticking out from inside the circle, and some of them were, the circles connecting circles, and I was just like, how on earth do you read this stuff? This is just, I've never seen anything like this before in my life. I mean, first of all, what is that kind of, it's the geometric stuff, but what can you sort of explain in a quick way how it works? And then secondly, did you find that it did work in the lower time frames, but it just wasn't for you, if you know what I mean, versus it didn't work in the lower time frames as well as it does on weekly and monthly?
Both, right? First off, JC and I, we did a follow-up to our first blog post, and it was all about market vibrations, right? So everything's vibration. And since everything's vibration, right, things move in waves, right? And, kind of what we can get into an Elliott wave discussion if we want. But so these waves are governed by natural law. And what these arcs are basically saying, if you drop a rock into a pond and these waves made out, that's all these arcs are, right? And so from the initial impulse move off a low, especially like a weekly, monthly. Now remember these, I'm looking actually at Tilray. The first impulse move went from the middle of March to like the end of June, right? That's a long time. Then it corrects all the way down into November. So we're looking at pretty much an entire year for the impulse move off of a low to be formed. You see what I mean? That initial impulse move off of a low or off of a high, right? That will govern the movement of the stock for the rest of its history, believe it or not, right? And so the angle, right? The length, how long does that price go up from both price and time? All that's basically equal to the weight of the rock that hits the water that creates these ripples of waves. And so when you see these arcs, right, that's all they really are, the waves. And so those waves are going to move out from that low or that high down, right? and they're going to create and run into interference, right? And so those interferences are what we know as support and resistance. So anywhere along those arcs, look back in the past, and you said an arc was able to cause, in the past, it's like polarity, right? It's able to cause some sort of support or resistance in the past. If you go to the future, it should, or it might, be causing the same sort of thing, whether it's support becomes resistance or resistance becomes support. What that allows you to do is really just get a feel for the movement and the flow. I'll trade off of those arcs, right? I'll trade off of the patterns and the numbers, but those arcs, I'll overlay them on top of them because it'll be another, sometimes I'll get up 10, 11, 12 different techniques that all give me a level where the numbers are all coming together, right? And so the arcs are a visual representation of that vibrational energy that's moving the stock either up or down. Does that make sense?
Yeah, it does. Okay. And so you mentioned, like, obviously you're talking about stocks now, but you did mention you were spot Forex trading back in the day.
Yeah.
I mean,
works on anything?
So it works on everything. Okay, cool. So Forex, it works on them as well. That's interesting.
It works much better on Forex because it's so liquid.
Yeah. And so if somebody was going to dive into this and go, right, I want to find out more about this geometric sort of trading and these waves and stuff, what would be, I suppose, how long, what kind of journey are they getting themselves involved in?
A wonderful journey, but I'm gonna help everybody out. All right, Cam. There's a book by Michael Schneider. It's actually a web too. I think it's constructingtheuniverse.com. But essentially, Michael Schneider puts out a book. It's an amazing book. And it's essentially How to Create the Universe, a journey through the numbers 1 through 12. And what I tell people is, and I don't teach this. I have in the past, and maybe I've had 20 people approach me, says, hey, I want to learn this. I'm like, okay, go get this book, Michael Schneider's book, all right? And if you can't put it down because you're just like, oh, my gosh, this is amazing, email me, call me, and we can talk. If you're like, what the heck is this? I've just saved you tens of thousands of hours and probably dollars. Going down this rabbit hole is not for you, right? So that would be the first thing I would recommend, honestly. And the book's like $15.
Right.
Because the concepts in those books, numbers 1 through 12, and the patterns, they're all there, but he shows them out in the world, right? Not necessarily to the stock market. And those patterns and those numbers and the numerology and the geometry that are all associated with those numbers are all in that book. So if you read that book and you're like, wow, I really like this stuff, come and jump on the crazy train, as Ozzy Osbourne would say, right? And off you go, right? I wouldn't do a thing until you do, right? Because you're going to skip a step, right? You're going to not necessarily. For me, I understand why, let's say, the Great British Pound is going to stop at this level, right? What is behind it, right? And so I delved into the theory behind all this stuff: musical theory, numerology, astrology, astronomy, Pythagorean theorem. There's stuff from the Kabbalah. There's actually numerology and cycles from the Bible, and all of a sudden you just dig up all this and trying to, like, boom, I believe, get back to the normal things, right? There's no more books I really need to read. Now it's just what's in between my two ears, and let's get it on, right? But if someone's interested in this, I would really recommend that they get that book. And if they like it, then I can recommend some more books to start you on your journey.
Cool.
Sense?
Yeah. And so I mean, like, if when you're trading in these weekly and monthly levels, I mean, what risk to reward are you looking at?
3 to 1, right? For every, let's say, $10 I risk, I want to make at least 30.
And
right?
are you able to sort of determine your stop loss based on these patterns as well, or do you just have an arbitrary
Absolutely,
stop loss?
that's that's the power, right? Because again, they don't work all the time. They're not going to. I don't think anything does, right? So I know I need to enter here. Okay, what am I willing to lose, right? So I know I need to, let's say, buy at $10, right? Okay, how confident do I feel on the pattern? is there a lot of thrust coming into this? Or should I pass and wait for like a signal reversal candle, right? Or is it really setting itself up and I've got 10 numbers that are overlaying each other? Let's lever up here and make it happen, right? So I have good ideas. I used to say I like to either short against the wall of China or against the wall of China, right? So someone will say, hey, what do you think of XYZ? I'm like, it's no man's land. And what I mean is there's not a discernible pattern where you can take profit or where you can short or where you can buy. It's off it goes, right? Or and so I can't enter just into the market. It's a fault of mine, right? But I have to enter against something so I can manage the risk. So most of the time, it's a known level in the market where I'm going to buy or sell. And then it's really, I'll never risk more than %. But that doesn't mean that I can't, let's say, put a 10 lotter on and just make my stop 30 cents. Or I'm going to put one lotter on and make my stop $3. You see what I'm saying?
Yeah.
So it's like, okay, it's an art, quite frankly, but it's never more than 3%. I'll get out.
And so, like with trading weekly and monthly, I mean, I must free your time up massively in terms of having to, what's your trading day? It's probably more like a trading week, is it? Or how does that work for you?
Well, I'm on the charts every day. I just love it, right? I love to blog. I get questions asked. It's okay. I'll check it out. But a lot of entry orders, right? And I don't want to be around it, right? Because I'll screw it up. I have a lot of different interests. And it's allowed me to, it's cleared my mind too. Like you're staring at a 5-minute chart all day, you go crazy. At least I do, right? And then you're able to slow it down, right? You're able to slow it down, and quite frankly, it's where you make the money, right? Like I said, a DBA, UNG, those things have been rocket ships. UNG is obviously correct now, but I waited for those a long time, right? And then the initial position, whatever I want, let's say I want to do 1,000 shares, I'll do 500. So I don't worry about it, right? Stopping yourself out of your personal stop loss is mentally worse than any dollar amount that you lose. You know what I mean? You never want to mentally stop yourself out. So whatever position you think you want to do, take half off. Yeah. Relax, chill out, put it on. And then the gyrations don't lock you out, right? If you're too levered, then get out. And then the thing takes off in your direction, of course. It always happens that way. It knows exactly when you and I enter camp.
So when you're like do you manage any of your trades, or do you literally let them just run to the TP and get out, or
let them run?
You let them run, and do you only go long because you're trading stocks now? Or? No, you go short.
I think, and again, that's again part of the problem. I like short better than going long. I see shorts better than longs, and a lot of times, like I'll invert the chart, and say, okay, short this when it's looking like it's a buy. Because I just see shorts better.
I've heard that shorts, some people only trade shorts because and maybe it was a guest that mentioned it, that because the move is often faster and quicker, more impulsive going short than it is going long. I don't know, but maybe that's the case. What about, so in the current sort of climate, I'm sort of getting some words around or hearing some noise around, like, everything's just completely build up to the nines. There's no more room for upside. We've got to have a major correction coming. With your sort of view on outlook on this longer term monthly, weekly, are you seeing anything like that at the moment?
Well, I just blogged, and we can share some charts and push them around when you want to. I love this ratio. So ratio analysis for everyone listening in, it's very powerful, right? It's not that a stock or a security or a commodity or a currency will go up or down. It's just compared to another asset class, it's a stronger asset class than another one. And so in the current market environment, one of the key ratios that I've been using, and you can go ahead and search it, is the Staples ETF XLP, right? And then over the New York Stock Exchange Index. And the only reason I do that is that's kind of the largest aggregate look at, stocks per se. So that's, 5,000 plus stocks, right? And so what's happened in 2021 is that ratio has just been stuck in a band since like February, right? And the other blog I did, I think 2 or 3 days ago was, you got to have a trading strategy until it fails, because it will, right? But the ratio going down is XLPs on the top, New York Stock Exchange is on the bottom. The reason we're using XLP is because it's an aggregate for risk-on, rough mindset for institutions. If they are on a risk-on mindset, they're like, I don't care that Bart needs to go get toilet paper or toothpaste or anything like that. He's not worried about it either. Let's get long and let's go, right? Risk is off. Wow, things are correcting. It's pretty ugly. Risk is off now. But I know Bart's going to need toilet paper, toothbrush, orange juice, right? He's going to need staples to live. So staples will start to outperform. So in this case, as the ratio is going down, equities in general are risk-onish. As the ratio starts going up, equities in general are now risk-offish. The market should correct or pause, right? So this channel, right, you would have a field day if you bought them at the channel, sold the top, bought the bottom, right? It's just, and every time it hits the top and the bottom of the channel, there's an inflection in the market, right? So we haven't broken out upside or downside out of that channel yet. So these market gyrations that are occurring right now, all I think right now, it's telling us that we're correcting a little, pausing a little, but until we break out to the upside, like have a weekly close above that channel, and I can show it to you real quick.
I'm just actually having a look at it now, so maybe we'll do a video after this, and we can chuck that up on the video so people can have a look. Yeah, so I can see it's like you could have had a good few trades off the range. But you're saying as soon as it breaks out of that, then you think that things are going to change.
They could. They should. Right?
Yeah.
But what I'm talking about is like a weekly or a monthly close. Sorry, my camera moves on me. A weekly or a monthly close above or below that channel, right? If it closes below it, it's going to explode, right? If it closes above it, it should correct pretty nicely. The other thing I'm watching is there's been a long-term target on the banks, the banking index in the United States. That target's never been hit, so I want it to go up there and tag it, because then we'll know where we are, right? The great thing I love about the patterns too, Cam, is they allow us to just do if-then, right? If market breaks above the NY channel on a weekly basis, then short market. It's just easy, right? Yeah. If weekly close below the channel, then go long market, right? So you have these levels, you have these kind of, line in the sand, if you will, where you can make decisions. I remember about 4 years ago, the banking index had a really powerful sell signal. And what I mean by a powerful sell signal is it doesn't mean that it's going to work. The probability is higher, but on like a long-term chart, there's like 6 different techniques that came in, all the numbers were on top of each other. So you knew exactly that was the point. And so I called a buddy of mine who's a big institutional trader. He's down in the Bahamas. I said, hey, this is a perfect pattern. It was lining up in price. It was lining up in time. And so all I'm saying about it being perfect is everything's lining up, which means I have no idea what's going to happen. But if it fails, get long the stock market, right? Because it's going to explode. Banks lead us up, banks lead us down, right? If it works, short the stock market, right? Because banks are going to go down, and quite frankly, this is a great sell pattern. Well, not only did it fail, it gapped up and above that, and it was like, get long. That was a pure and easy signal, right? And so that's why I wanted to go up and tag, the banking index target. There's things too, especially, sorry if I'm talking too much, you can tell I love this stuff. From a chartered market technician, we're also taught all this inter-market analysis, right? How everything kind of moves and flows together, right? Currencies, fixed income, global equities, right? Not just the U.S., global equities, and commodities. That's your circle of life, and the money's moving around in that circle of life. It never pops out. Well, it might go to crypto. No, we can talk about that later, right?
Yeah.
But it's basically, that's your circle of life, and it's always just doing a dance, right? When you can figure out where you are in the dance, you're going to be able to manage risk well, right? So, palladium is a huge correlation to the NASDAQ, right? Why? Well, palladium is in all the doggone electronics.
Right,
so
of course.
There's a monstrous target a little lower on palladium. So we're in a bull market right now. No one's told us we're, bear market or not, right? Seems like we're correcting a little bit, right? So this is a monster buy pattern on palladium. It's just a little bit lower. You got to buy the NASDAQ there, and don't be married to it. And again, like we talked about, if you want to go in with a position of 500 units, go in with 100, right?
Yeah.
But,
yeah.
So honestly, Cam, I really have no idea. But until we break out of that channel, until that palladium targets hit, until the banking index targets hit, and everything like that, I think it's game on. But I'm being very cautious.
Yeah. Okay. So there's no. So you're not sort of going. Oh, there's nothing there. You're saying, oh, this is a massive correction happening. Okay. Cool. Now,
not yet. Not yet.
Yeah. Not yet. Now, what about?
We're close.
Yeah. What about if you're just a regular Joe working a day job? What do you recommend steps they take to start making money from the markets?
Lengthen your time. Minimize the size of your position so you're not worried about it, right? And just learn some basic technical analysis, right? Throw an RSI on there. Look for bullish and bearish divergence. Learn basic retracement techniques. I've to a whole different level which you don't have to, right? But ultimately, and do your own work, right? Because the news is, you'll go crazy, right? Do your own work. Maybe follow one or two people that you like, right? But ultimately, I think people make mistakes. There's a friend I know. He's a great guy. He's like, I'm going to start trading full time, and he took out a bunch of equity in his house. He's never trained, and he's getting killed, and I feel horrible, right? So, really get your mind right that you're going to lose money, right? No one teaches you this, right? I know of no successful trader who hasn't lost money.
Yeah, I mean, it goes with the interviews I've done. Everyone's pretty much lost money at some point, and taken the lesson, felt the pain, and then come back. I mean, what mindset techniques would you recommend to somebody and say, look, here's what I recommend as a tip to try and get your mind right for trading.
Yeah. So have you ever heard of Trading in the Zone by Mark Douglas?
Yeah. Read
the book. It's great, right? And not only read it, but understand it, right? Every market moment is unique. An edge is nothing more than a probability of something happening than not, right? Once you enter into the market, it's over. You can't control it. Don't stare at it anymore, right? I think what happens is when you're first starting out, you have 14 moving averages, 18 oscillators. Of course, you're going to throw Bollinger Bands on there. You know what I mean? You got that so much stuff to chart. And what's your edge? Right? You don't even know what your edge is, right?
Yeah.
Some people might just buy breakouts, sell breakdowns, and grab 50 cents and get out, right? Define your edge. One thing Larry Pesavento told me that was really powerful. He goes, you're not going to make, well, two things. The first thing is you're not going to make any money till these patterns become yours. And I was like, what? What are you talking about? He goes, I wrote the book, right? But you need to make them yours, right? You need to trust them, and they need to become your edge. And you need to trust your edge. And you need to trust the fact that your edge is not going to be right 100% of the time. That took years to understand me. Again, I might not be the sharpest tool in the shed, right? And then the second thing, it was really funny. I was sitting there. We were trading at his trading desk. I go, Larry, what's a good month for you? And he goes, 1 cent. And I laughed. Sorry, I'm looking up at the camera. I wanted to see your face, but I'm like, crap.
Oh, yeah.
I laughed. He's like, what are you laughing at? I'm like, come on, Larry, 1 cent. What do you? He goes, 1 cent. This guy's been trading for 40 plus
Oh,
years.
right. So he's made 1 cent profit for the month. Is a good.
Yeah. He's like, that's a good month.
Yeah.
Anytime you're green.
Yeah.
And he goes, you don't understand that it's going to be a long journey for you, Bart. That's what he told me, and I didn't. And now, guess what? You know what a good month is? 1 cent, baby.
Yeah. Yeah. Yeah, it's a tough gig. It's a tough gig. Now,
it's a hard gig. Trading. What did they say? Oh, trading's not hard. It's just not easy.
Doesn't make it any easier, does it? Now, if there was one thing you'd recommend any retail trader spend the next month mastering, what would it be?
Well, first off, this, right? Measured moves.
Oh, I did read that in your blog, and I saw that you had that listed.
Don't leave home without it, right? And it's, I think, especially on a monthly and weekly, measured moves. I mean, they are so powerful. The market does the same thing every single time. Human emotions, they never change, right? And those prints show up on longer-term charts.
Do you want to describe a measured move for the guys that don't know what it is?
Sure. Yeah, sorry. Yeah, of course. So a measured move is, let's say we're in a bull market, and off we go, and we take off from a low of $10 and we go up to 100, right? And so any time throughout that move, there's going to be gyrations, right? So let's say we go up to 20 and we go down to 15. That's a $5 correction. And let's say that's our first correction, right? That $5 correction becomes the correction that you can all future corrections off. So a measured move for that particular stock, commodity, bond, currency, whatever it's going to be, that $5 is your measured move. So as the market starts correcting on you, pulling back, if you will, just copy paste that $5 move that went from 20 to 15 and overlay it on top of 50. And so it'll go down to 45. Start looking for a basis for entry. The other thing that's really key is these measured moves are harmonic, okay? So you can extend these measured moves by, let's say, 1.618, right? Golden mean, 2.618, 2.236, square root of 5, right? So, but that initial corrective move is your measured move that you're going to want to be aware of as the market keeps going up and up and up. And when big corrections start to occur, which invariably they will, right? You go out to a longer chart, and then you look and see, okay, what in the history of this chart, as much data as you can get, what is the largest corrective move that you've seen? Expect that to occur again, and that'll allow you to really hone in your entries, right? And sometimes it might not ever get down to that level. A lot of times, once we've, let's say I had a 5-wave movement, whether that's a wave 1, 3, or 5, whatever it's going to be, it'll correct the same amount all the time. Those are measured moves. Same thing, correcting moves up, right? As the market moves up, then it goes down, take that initial move up, and that's just a projection, right? That's another measured move that you can use. Here's another tip. When you start looking at these different corrections, I'll always go to log scale also. And the reason I do that is I also want to see what the percentage correction is, okay? Because the pace correction and the percentage correction are going to be different. A lot of times the percentage correction works. So you want to know where that level is too. Then you drop your retrace grids. Then you get into some price projection techniques. And now you can come in with a nice little level that helps you what? Manage risk. Not make money, manage risk. And then you decide, do I want to buy it or not? That help? Cam,
yeah. I think measured moves is a great thing that people could go away and master. And I mean, maybe we can potentially touch on it when we jump into this video. Sure. Now, we're going to actually, before we jump into a quick fire round and then wrap up, I do want to ask, and I feel like I'm missing a question here around when you were back at doing the spot Forex trading. Mm-hmm. Do you want to sort of talk us through that and how that looked? Because I know a lot of my listeners are Forex traders. How that looked from a sort of day-to-day basis?
What do you mean?
I mean, like,
sure.
Were you entering at that stage? Were you entering on intraday market, or were you still doing monthly or weekly? How did that look?
It was actually a little bit of both, right? I was trying operative word, right? I was trying to get something where I could get it, right? And so if there's a nice little 60-minute pattern, sure, I'd enter in, close it by the end of the day. If there was a longer-term weekly or monthly pattern that was setting up, I would look for those patterns, but I'd go down all the way to a 1-minute chart. And that's a pretty neat drill if you can ever do that. It's actually really cool, right? So you've been hawking a level forever, and then down and see that level get hit on a 1-minute chart and see the reaction. You can, high probability, if it's not, again, it's trading, it's, nothing's for certain, but there's a high level of probability that you'll be able to see, that's a good level. And then you just got to start thinking. And I remember with the Great British Pound, it loves, I don't know why, but it loves to bounce around the 0.886 retracement level, right? And I remember entering in a long and going from a monthly all the way down to a 1-minute chart and watching it hit the 0.886. And on a 1-minute chart, it's always going to come back and retest it, right? And I just thought to myself, why in the world is this working, right? What is it? Every equity, commodity, and fixed income market would have to operate 90 days continuously to equal 1 day of liquidity on the foreign exchange market. And then you got to think of the yards that are going around, the interbank that's going around, and all of a sudden the market just pivots on these levels. And by the way, you got all the algo trading going on, you know what I mean? And it's just like, this is crazy. How the heck is this happening? You know what I mean? It still blows me away sometimes when it works. And the day that doesn't is probably the day that I need to stop investing.
When you work it out, that's the day.
Yeah, when I'm no longer like, holy smokes, this is incredible.
Yeah. Cool. Right. Let's jump into a quick fire round here. You've answered some of these questions already, so I'll skip through some. So how long did it take you to go from newbie to consistently profitable?
Over 5 years. Easily. 7, a long time. I was making money and everything, but I wasn't consistent.
What's your favorite entry setup?
The end of a C wave of an expanded flat. Sorry.
Okay. End of a C wave of an expanded flag.
Extended flat, right.
Extended flag.
Especially to buy it and short it. So, like I said, I love Elliott Wave when it works. That's not a joke. It's actually, I love Elliott Wave when it works. But if you're going to go down the Elliott Wave path, I think one of the best things you can do, if you want to learn Elliott Wave and cut the subwave of the subwave, it's like golf, When your buddy's out there and he's going like that, he's cheating on his score, right? He's like, come on, dude. You didn't get a 5. That was an 8. And they're like,
oh, right. Yeah.
That's like yeah, right?
Yeah.
If someone's to you, oh, this is the third subwave of a subwave, stop. You don't know what you're talking about, right? You can subwave fractal this thing till the cows come home. Elliott Wave is great. Learn the corrections.
Actually, I did an interview with a guy who's probably, I don't know if he's going to come out before or after you, but who was it? Paul Bartley, I think his name was. It's another Bart, yeah. Anyway, he was, or it might have been Bratley.
Heard that name.
Anyway, he's Elliott Wave as well as a whole bunch of other things, and his tip was just focus on the fifth wave. That was his tip. So just focus on the fifth wave, and then I don't know, I don't know if that helps anyone out there. Now, okay, what about
so that entry point, right? So an expanded flat is interesting, right? So in this case, we're going to look to buy, right? So the market goes down, right? And Bitcoin actually, I got back in at 28. The correction was a perfect expanded flat. And the key is that B wave will go up. It'll make a new high, but it'll only be on 3 waves, right? And then it flips down and it comes ripping down, right, into the C wave. Well, that initial A wave move, that C wave will be 1.618 times that or 2.618 times that. And the C wave will always have to be 5 waves. And because it's a C wave, it's very liquid and it's very powerful in form, balance, and proportion. So if you're on my blog, you can look at it. Sorry about that. Dang on camera keeps moving on me. But like the long for copper into the all-time highs, it was perfect expanded flat. So that is my favorite trade entry, to be honest with you, right? Because once you see that 3 waves making a new high, That's all you got to look for. And it's usually pretty prominent, right? It's not like you have to do the subwave of the subwaves. Okay, Cam, you're cheating at golf. Don't do it, right?
Yeah.
It's pretty obvious. As this thing flips down, you're like, this is a buy, and it likes to go 1.618 times that initial moves down, but sometimes it extends into 2.618 times it. But you can, if you just have a little wave counting in you, you can see it's like, okay, and that's when you get your fangs out. So that's my favorite trade entry, to be honest with you.
And sort of with Bitcoin, it's just tanked to 49,000, or I think got to 42,000 in the weekend. I mean, have you got any sort of predictions based on your circles to see, like seeing lines where it's supposed to be going?
Gosh, I wish. I think we're in a fifth wave, right? I think we finished one. We're correcting two, and I think that we could probably go up into the 100,000. But I think and people are gonna, you might not even post this video, Cam, of you and I. They're going to hate me, but there's some significant stuff going on in the Eurozone, Asia, Canada, right, where crypto might become, federalized, if you will. And there's one global cryptocurrency which could push the cryptocurrencies out there. So it's not a sure bet at all. And the count certainly lends itself to we are in a fifth wave. I do think we'll go high. Just if you look at it on a weekly or monthly basis, there's still room to the upside. But right now, I'm thinking that we're subdividing in this fifth wave. We finished one. That took us up into the low 60s. That correction down into the 43s too. And I think we got another gyration and everything. Should take us upwards in and around 100,000. But then after that, for me as a crypto guy, and I have been, I'm playing Bitcoin, I'm getting out. And I'm probably not even going to look at cryptos again after March.
Right.
That's interesting. I could be totally wrong. Yeah. I probably am totally wrong.
No, it's interesting. It's always good to get people's different opinions. Now, what about recommended trading book or resource? You mentioned a couple.
Well, the first thing is I would definitely read Trading in the Zone by Mark Douglas. I would definitely go get Michael Snyder's book, Ending or Constructing the Universe, if you want to go down this path. Larry Pesaventa's book, Patterns, Profit, and Peace of Mind. That's a great book, right? That's where you get the Gartleys, the ABCDs, the three drives, the butterflies. That's honestly a book you really need. If you want to go to, if intellectually you feel the tug after you've read the Michael Snyder book, because it's only $15 right now, I would recommend any number of the Michael Jenkins books, but one book that I think will really blow people away is Secret Science of Stock Market Profits. I think I got it by weird.
He's just gone to search for his book, guys. If you listen to the podcast,
then if you really want to understand it, this book right here, Philomath by Robert.
Philomath, wow, science art, superb.
And then here's the last one for you, Cam. And I don't recommend it, but if you really want to dive as deep as I've dove, the
30-second jewel. What's that about?
This is Tommy Brown, and this is all about the law of vibration. Look how thick this thing is. That's my face.
Take her a lifetime to write that. That's humongous.
Yes. And, I mean, literally,
take me a lifetime to read it.
25, 30 pounds, girl. So, those I would recommend those, honestly.
Awesome.
Does that help?
Yeah. Brilliant. Now, what's your preferred broker and trading platform?
I'm an Interactive Brokers guy.
Alrighty. Cool.
Yeah. They give you the world. Their spreads are awesome. I think they're the best. And I think they're the safest too, quite frankly, Interactive Brokers. So yeah, and I love their B-Station, but yeah, I've been with them for years. And then I use eSignal. I don't use any of the advanced get or any stuff. It's just e-signal. It's end of day data too, right? Because I'm on longer term time frames. So I spend like $40 a month on chart, and then all I use price and time, I draw stuff. So I don't need a big, huge package. CPG, you get all that unbelievable data and stuff. And I imagine if you're an institute person that you probably want that. But as a retail trader, I just use end-of-day data on e-signal.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Awesome. Now, what about your worst ever trade? Do you want to walk us through that?
Yeah, I tried to go long the dollar versus the yen at 72. Think about it. Yeah, I got stopped out 8 times in a row. And I went into a 13% drawdown, the first drawdown I've ever been in. And my partner was so pissed.
You got stopped out and you went into drawdown as well. Well, because the stops are so wide that by the end of it,
my stops were too tight.
Oh, sorry, you draw down on the account. Gotcha. Yeah.
Because I was greedy. I was so. I don't know if you've seen. That is back in like 2011, right? It was really obvious, but it was like, okay, the yen, it's topped, and the dollar's about to take off. So right around, I'm looking at the chart right now, right around September, October 2012, I went long, and I had such a big position on. I was greedy, and kept getting stopped out, and we went to a double-digit drawdown. And of course, when I stopped out of the last position, it exploded, and it ended up topping out at 105. So now, we wouldn't be having this conversation.
Yeah.
I'd be on a boat in the Bahamas right now, but that's okay. It's all part of the journey. I think the dollar yen is probably another trade of the decade that's coming up.
Right.
We can talk about that one if we want to. But yeah, that was it.
Yeah.
And
is that after breaking the coffin, the iron coffin lid? Did you hear about that? Yeah.
No, I didn't, but it broke me.
Go and check out a video that I did with Lawrence Yang. He talks about that in a video on the channel.
Oh, now, okay, I will.
Yeah. And so guys, well, actually, last question of the show. Could you leave our listeners with one piece of advice?
Never give up. Keep scrapping, right? It will turn around. I'm living proof. No. Define your edge, right? Your edge doesn't have to be my edge, right? Seek out multiple different type of techniques, but ultimately it's going to have to be your own, and keep it simple. If you have more than 2 indicators on your chart, it's not simple.
Yeah, simple is good, eh? Now, before we wrap up, what's the best way for the guys to get hold of you?
Yeah, so you can hit me, a lot of times, just hit me on the website, contact page for bartscharts.com. You hit me, Bart at bartscharts.com, and I'll always reply. And then you can text me. My number is 703-431-9020. I'm an open book. I got, nothing to hide, and I'll try to help out by and push them along. But, never give up, right? Once you see the light, once you figure out what your edge really is, your frame, all that stuff, it's not that hard. It's just survive your head. Surviving your ego.
Cool.
It's the hardest part.
Well, look,
damn, it's been a blast.
Oh, look, it has, mate. Look, really appreciate it. A big thank you to Bart for sharing with us today. Everything we've discussed here, along with all the links, are going to be in the show notes. To find them, simply search for Bart in the search box on tradingnut.com, and I'll probably put you in there as Bart Bartelloni, and just leave out the Jim for now. So search for Bart that way. Until next time, I wish all my listeners trading happiness and success. All right, folks, there you have it. Interview done and dusted with Bart. Now, do remember, we shot that video over there on YouTube where he breaks down these circles on a price chart. You've got to go and check this out. It is crazy how accurate they can be. Go and check that out on the YouTube channel right after this. Also, we've got Genius Trader coming next week. Just remember, this is going to revolutionize your trading for 2022 and beyond. Okay, so stay tuned for that. Subscribe to whatever you can. And the Robot Builders Club offer is ending very soon. If you're here, January 2022, then you can get access to these 2 robots. After that, they disappear. So go and check them out over there on tradingnut.com and the Robots Builder link. And if you do want to do a free training, there's a free training over there that you can take as well. All right, guys, thanks for watching. Thanks for listening. And we'll see you in the next episode.